Hi, I am Anna. I come from www.ntvforex.com. Quarterly Witching Dark Spell Ahead Analysis http ntvforex.com News ID 875504 9/18/2026 59:30 am Futures and options for stocks and indices set to expire today. Equities to remain supported by Fed's ultra-low rates. Numerous potential catalysts for volatility over coming weeks. Asian stocks are edging higher with the MSCI Asia Pacific Index set to register its first weekly gain this month. However, the sell-off in U.S. stocks is set to extend as futures for the S&P 500 and the Dow Jones indices are falling into the red at the time of writing. Nasdaq 100 futures are edging into the green, suggesting that the index could have a shot at pulling out of its technical correction by the weekend. The sense of trepidation in the markets is also evident, with a modest bid in safe haven assets and gold prices set to register a second consecutive week of gains. Market participants are bracing for potentially heightened volatility, with U.S. markets set to undergo its quarterly witching as futures and options contracts on stocks and indices expire today. And it may not end there. The seasonal end of the quarter portfolio rebalancing by large institutions, such as pension and sovereign wealth funds, could also contribute to choppy market conditions over the rest of September. Indeed, the looming U.S. elections and the political uncertainty could paralyze some segments of the markets in the lead-up to November 3. Set against such a backdrop, no wonder the Volatility Index VIX, also known as the Market SA Fear Gauge, is retracing towards the 30 mark and testing resistance levels at its 100 and 200-day moving averages. Since the dramatic drop earlier this month, investors are awaiting fresh catalysts that could jolt the markets either way. In the interim, the 50-day moving average is proving highly significant for multiple assets, from the S&P 500 to gold, as it is being relied on for key support. Investors drew little cheer from the continued recovery in the U.S. jobs market yesterday, despite the drop in both the initial and continuous jobless claims. The forward-looking nature of the markets demands that more U.S. fiscal stimulus is rolled out, although such prospects look slim over the near term given the current impasse between the Democrats and Republicans. The drawn-out political stalemate that only delays much-needed financial support would severely undermine the recovery in the world's largest economy, a risk that global investors are very much aware of. After all, market participants were reminded of such a risk by Fed Chair Jerome Powell during the latest FOMC meeting earlier this week. Still, any declines in the stock markets over the weeks ahead may translate into buying opportunities for long-term investors. Considering that the Federal Reserve is looking to keep U.S. interest rates ultra-low possibly until 2023, the lower-for-longer interest rate regime should only boost the appeal of equities. Perhaps the bouts of volatility that may arrive over the days and weeks ahead will be useful in offering timely reminders about stealing one's resolve in the face of more fearful times. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.